All right. Hello, everyone, and welcome to today's webinar, a deep dive into decentralization. I'm your host, Luke Kerner with Blockchain Co-Investors, and we're a crypto fund-to-fund. And we also do one-off investments, generally when one of our VCs is able to get additional allocation in the deal that they're investing in. And a great example of that is the decentralized talent network, Braintrust, where we last invested in January of 2020. The Braintrust token went live on mainnet on September 1st, and in my view is really one of the best examples of a decentralized organization that's really been able to scale outside of DeFi. So the genesis of this call was really my interest in hearing from someone with real world experience about lessons learned on the path to the decentralization, and my belief that lots of other people would be interested in that story as well. And so our featured guest is Adam Jackson, co-founder of Braintrust. Hey, Adam.
Hey, Lou. Thanks for having me.
And Adam's going to walk through a 20-minute presentation on Braintrust and decentralization, after which we'll have plenty of time for Q&A with the audience. So if you have a question you'd like to ask, put it into the Zoom chat application. Just click on the chat icon, put in your question, and if we take your question, we'll let you know via chat, and we'll bring you up on stage as a third panelist so you can ask the question yourself. But before I pass it off to Adam for his presentation, I'd just like to have you quickly kind of discuss, how did you see the crypto light and massive opportunity of decentralization?
Yeah, sure. So I'm a software engineer by training, and I've actually been building and investing in marketplaces my whole career, and web-enabled marketplaces. And so I, got first into crypto. I bought Bitcoin, and it was 2012, and I thought, okay, cool. Maybe this is cash someday. I had no idea it would be the store value it is, and sort of typical kind of bought it and forgot about it. Fortunately, didn't lose the keys on a laptop or a dumpster or anything. It did sell it well before I should have, of course. But what really got me into like full time into crypto is, I got to participate in the Ethereum crowd sale, and then the Binance crowd sale, and some other like very early token sales in the, right when Ethereum was coming around, and it's in these Turing complete smart contracts were a real thing. And that just captivated me. This idea of, as a marketplace builder, I always kind of realized the dirty little secret of marketplaces is the users who make their living on them almost never have any control over those marketplaces. And this is where kind of shares of stock sort of fall down, I think, from a governance standpoint. Tokens that represent control in networks could really pick up the slack. So that's what got me into it. Really, in 2016, I became kind of full-time in the space. I helped start an asset management firm called Cambrian Asset Management, which is now a very large digital asset management company. And our project Braintrust actually was incubated out of Cambrian.
Oh, very cool. I did know that. I actually heard a great description of Ethereum the other day. Somebody called it described it as a coordination machine.
100% agree with that.
Yeah, which is really, I think, a super cool way of thinking about it. And certainly that's how Braintrust is using it. So with that, it would be great to have you go through the presentation.
Yeah, let me share my desktop here and hit present. Can you see this white title screen here, Lou? Good. All right.
Saving shareholder money on graphics.
Yeah.
Or community member.
Don't get me started on graphics. Okay. Here's what I hope to cover today. First of all, we'll talk about what is Braintrust. We're one of the world's first decentralized talent networks. Then I'll dive into why would we decentralize, sort of what I was hinting at earlier, the problem with Web 2 marketplaces and how Web 3 fixes those problems. We'll talk about our journey so far. This last week was a big event for us. We hit mainnet and we're listed on Coinbase. And then what's next? Like, how do we continue to scale a model like this? So, just as a backdrop for anyone who hasn't heard of Braintrust, it's a decentralized talent network. And all marketplaces, have at least two sides. Our two sides are knowledge workers on one side. We offer large, complex, kind of, well-paying software gigs usually ongoing. So it's not logos and websites. It's like machine learning applications and, in-dash software for Porsche and really interesting stuff that as a freelancer, you could actually leave your full-time job and come work on these things. Amazing community, which we're going to drill into later. Little control over the network through our token, which we'll also get into more detail. And then most importantly, the whole point of Web3 and decentralized networks is the middleman gets eaten by the software. And so, we'll go into, I'll show you take rates from some of our Web2 competitors, but we charge our talent 0%. And so if you want to make $90 an hour or $150, whatever your hourly rate wants to be on the platform, you get exactly that much. We don't mark you up. On the client side, it's obviously like access to global talent, right? I mean, there's all companies in the world are now expected to act and innovate at the speed of tech companies. But most of them can't hire these tech folks, designers, product managers, engineers, project managers are the types of talent we have on the platform. Most companies can't get those folks in-house anymore. It's too hard. So we have access to this amazing talent pool. We have a matching algorithm that matches them quickly, deep technical expertise. It's not a junior job board. There's a lot of experienced talent here, very easy to onboard. And because, again, of the disruptive fee structure, we only charge our clients a 10% success fee, not 40, 50% like a lot of other marketplaces do. Your client money goes further. So you get more built for your dollar. So those are the value props. And let's talk about some macro trends around like why now? Like why is Braintrust actually growing now? Why does it make sense? And how has this network been able to grow so quickly in really just 2 years? Well, the first, remote work is the new norm, right? This was sort of the silver lining of the terrible COVID pandemic last year was everybody was forced to figure out remote work, and so that obviously lends itself well to a decentralized talent network. Tech innovation is now just like it's table stakes for any company, whether you're a CPG company or a car company or whatever. Everyone needs this tech talent. And I think the most interesting here is we have this phenomenon we're seeing in 2021 that's being described as the Great Resignation, where salaried folks are sort of rethinking, do I want to work for one company and sort of have to drag into a cubicle or whatever every day, and or do we want to specialize and work my own hours and have more freedom and autonomy? And so that is just these are sort of the interesting macro trends driving growth at Braintrust. Talent, quick snapshot of the talent network. About half US, half not US. Mostly in English speaking, but that is changing quickly. The client side is really, I would say, the most shocking part of this story with Braintrust. So these are all clients that are actively transacting on Braintrust, meaning they are hiring talent to do jobs, gigs. Every single one of these companies, would love to have people in-house, but they, it's hard to, so they go to Braintrust and the value prop really sticks. What's interesting is a lot of these companies, are sort of, they're now in crypto and a lot of them don't even know it. So this logo side actually represents like a lot of, GDP shift from the regular web-enabled world into crypto, a lot of new money coming in. Quick snapshot of our metrics. This is off of a dashboard that we're going to be publishing live very soon. It's still in QA, but the network has done around, this is a week old, it's probably closer to 18 million in transaction volume so far since inception. We think we'll do 31 this year. The GSV there. So GSV for us, that just means a client hiring a talent to do a job. It is growing. The GSV is growing 30% month over month organically. It's important to note we don't spend any money on marketing. We don't have marketing budgets or things like that. This is a completely community-driven project. Talent community of 50K. That's funny. This slide's a week old. It's now 700,000 and growing. I have a update later with some more stats for you because this is a community-focused discussion. Hundreds of global clients and thousands of jobs. So it's a big network. I think the point here is like this is not it's not just a white paper. It's not just sort of like maybe this will work someday because of crypto. It's actually like a big thriving network. So why decentralize it, right? Like I'm describing a talent network right now that you can operate without a token, right? We get this question all the time, like, yeah, there's talent networks out there. Well, our core belief here, like the big idea here for us is we think networks that are owned by their users will grow faster and be more valuable to those users than networks owned by investors. And I'll walk through sort of why that is. So here's where Web 2 talent platforms went wrong. They have very extractive practices. Their job is to, they're for-profit companies, right? Like TopTal, Upwork, Fiverr. These are for-profit companies, the first two publicly traded, and their job is to maximize revenue and profit. And where does that revenue and profit come from? It comes from taking fees. Every transaction that happens on their network, a portion of that is extracted as a fee. And what that does is it ends up, concentrating power with a few in the center, right? So from a governance and control standpoint, it's lousy if you make your living there. It's very capital intensive to grow. That's how the investors end up owning it. But the main point here is when the operator and owner of the network, when their job is to take as much money as they can from their users, and their users make their living on that network, you have divergent incentives, right? And so anytime you have divergent incentives, you are eroding your own network effects. And you see this playing out in the gig economy today, right? Like Uber drivers, not big fans of Uber Inc. DoorDashers and restaurants, to put it generously, not big fans of DoorDash. So this is a new way. This blockchain, if Mark Andreessen famously said, if software is eating the world, then blockchain's eating the middleman. And so that's the whole point of Web3, right? So these are some of the take rates of Web2 marketplaces. Obviously, again, we've brought ours down to zero. Because why? Because we're owned and controlled by our talent users. So if you're owned by your users, why would you want to charge yourself high fees, right? This is all about keeping incentives aligned. So let's sort of describe, more broadly what Web3 and user-owned economies mean. So, first of all, specialization. If you don't have to, if there's no more demands for profit, you can be more selective. The talent can pick and choose, much more freedom there. We're all striving toward autonomous markets, right? I know DAOs are a big hot topic right now, but really, like, the software is the middleman, and the software doesn't need to generate profit, right? And so now you can change the economics. And then community governance, this is the amazing part, right? Everyone's an owner. Everyone, it's one token, one vote. The more you help the network, the more tokens you get, and thus the more control you have. If it's efficient capital. So most web-enabled marketplaces raise hundreds of millions or billions in venture capital. That's how they end up being majority investor owned, right? And what they use that money for is to essentially subsidize one or both sides of the marketplace to gain liquidity, and then it's extraction time, right? It's payback time. And those investors deserve a return, right? They were the risk capital. This Web3 model inverts that, right? We've raised, Braintrust has raised something around $30 million, and achieved amazing scale with that. It has the majority of that money still in treasury. And so, the capital is more efficient. Price discovery is almost immediate in the network. Your incentives remain aligned. The users are the owners, so there's no, antagonism between the network operators, owners, and the people who make their living there. And it's permissionless. What's amazing is, so I'll talk briefly about this aspect of Braintrust. The core way Braintrust grows is through its referral engine. So we don't have like armies of salespeople or armies of in-house recruiters. We grow our talent through talent referrals. We grow our clients through outside salespeople or just connector, people who have a lot of connections. And when those connections join the network and start transacting, the protocol pays them out rewards in our token. And that is a completely permissionless system. Anyone can sign up. So like a headhunter could sign up and get her unique code on Braintrust and start bringing her network on and getting paid for it. So let's talk about the journey so far for Braintrust. So, here's what our sort of token, looks like. The token, again, is It has other uses, but it's, primarily governance token. Here's how it's given out. The referral engine and the community rewards is the majority of it. Some early backers like Lou and his syndicate and others, Pantera Multicoin, Blockchain, Acme Ventures, Pierre Midyar, founder of eBay, actually is a big investor. Scott Belsky, Robert Leshner. So early backers there. Early contributors are all of our core teams, and then we just completed a coinless sale last week. So as you can see, it's majority community owned. And what's it used for? So kind of three main categories here. So obviously governance is the important one. We actually forked Compound's governance contracts. So it's one token, one vote. We use Discord and Snapshot for sort of discussing ideas and proposing changes. And then you do on-chain voting, once you get enough momentum. We're also working on, this is actually a feature that's being actively debated in our governance channel.
Adam, the kind of one token, one vote. Obviously there's been a lot of experimentation with other models. Are you looking at at things that that other decentralized organizations are doing?
So there's delegation in ours. So it's, if you don't want to vote your token, you can delegate to someone else. But I think what you might be alluding to is quadratic voting, which is super interesting, right? That's where different user types can actually have a stronger vote than other user types based on their role in the network. So that's something that was actually in our original governance spec, was quadratic voting, and we just we didn't implement it yet, but I believe it will be implemented.
Cool.
The second use is what we call staking. So you guys probably know staking like Ethereum to proof of staking, right? Where you secure a blockchain with staking. With layer 3, with Web3, our definition of staking is a little different. It's more using tokens as collateral to sort of show intent, show seriousness. Like, so let's say we're in a talent constrained network, right? So the clients are competing for talent, which is actually the current state of Braintrust. But like, networks always switch to which side they're constrained to. What clients can do is stake some tokens along with their job postings and say, hey, any qualified person who takes the time to bother submitting a good proposal to us, whether we pick you or not, you're going to get some tokens in exchange for that time, right? So that, like, it's sort of like you use tokens to like unstick friction in flywheels. Here's a great example of that. Another one that's being discussed in governance is people want to be able to refer talent and then stake tokens on them. And then if the talent ends up doing well and like transacting a lot through the platform, their stake actually like gets paid a little bit more, right? It's almost like, when you hit 21 at blackjack, you get 1.5 instead of 1. So lots of interesting experimentation going on with bid staking at Braintrust. And then the third one, so one of the contributing teams to Braintrust built what's called Braintrust Academy. So this is not, it's a totally separate project someone else in the community built. But what's cool is you're able to earn tokens by taking courses, or use tokens to take other courses and upskill, and then have career resources and stuff like that. So Braintrust is really about like helping people up level through their career through the academy, and then find work on the marketplace. All right, well, let's get into community. So our community, it sort of has 3 constituencies: the talent, folks kind of doing the work on the platform, the clients that are contracting with the talent, and then contributors. These are sort of the connectors. These are the people who make the introductions and earn tokens that way. And then I just pasted this in this morning. This is just like, we wanted to give a little update here. Just in the last week, we had a Coinbase listing last week, and the community really expanded there. It went from 50,000 to over 700,000, is growing by the minute here. We have Discord and Telegram, our 2 main channels. The Discord engagement rate's over 50%, which is a rate we've never seen before. And then we've had communities self-organize to all these localized.
That's 50% a month of the Discord members. And when you say engage, yeah.
It's a live number. It's the numerator is the number of people talking, and the denominator is the number of people in the room.
Okay. Oh, okay.
Yeah, and so that's crazy. I think we were at 15 or 20% before. I mean, it's bonkers. So this is really cool. This has been, we started out this project with a pretty strong but small community, single digit thousands of folks, and it's really grown quickly.
And are there other metrics that you use to gauge the engagement of the community?
So the main metric is, number of people in the room, denominator, number of people talking, numerator, right? Those are kind of that's the main one, but that's quantitative. The more qualitative ones that we pay attention to are, okay, so let's go into the governance channel and see, like, what are people proposing, right? I mean, their governance channel in our Discord is unbelievable. People are like creating these great ideas and, engaging. Like we don't really we have a really, really small internal product team. Most of our product development is done by the community. So it's actually like you can watch product development happen live in there. And so that, and chatting about token economics. And so when we see really interesting ideas come in that the core teams had never thought of, to me, that's like successful community.
Can you talk about how has the governance evolved at all from when you first launched it?
Well, we just launched it on September 1st.
Yeah.
So we're pretty new. Now that's just the on-chain piece. To be fair, we've actually the way the Braintrust network was formed was a little different. So most projects you see have one core team, right? Like Filecoin has Protocol Labs, and Uniswap has Uniswap Labs, and Braintrust was a little different. We actually had 6 core teams that started working on this 2 years ago. There's Freelance Labs, which is the one I'm affiliated with, which sort of had the original token economic design. There's 2 core engineering teams, Hexocean and Snowfork. And then there's the Academy team. And then there's some more commercial teams that have brought all these crazy enterprise logos on. So our governance from the beginning was always semi-decentralized, right? It wasn't one company, right? It was kind of 6. And then we got the community involved more and more, well before we were on chain, right? We're just using Snapshot and Ropsten and whatever. And now that we're on chain, it doesn't feel any different, because we really been governing the thing sort of, decentralized from the beginning. And now it's really decentralized, right? Now, literally anybody could show up and chime in. All right, so I'll talk briefly here about our connector program. I've alluded to, we have talent users who do the work, clients who pay for the work, and then we have these connectors who just come in to make referrals. So this is what's cool about this is I think we've kind of reinvented the referral engine, the affiliate network, if you will. Our connector program is a global permissionless system where literally anyone can sign up in the application, get a unique code, start inviting talent or clients. When those referred users start transacting, or they sign up with your code and then they start transacting, i.e. you refer Nike, they hire someone, or you refer someone who gets hired by Nike, the protocol then pays out some percentage of the invoices. This says 1% here. It's actually, I think it's currently 2%. It actually changes and it will be completely dynamic at some point. So, as networks become either more demand constrained or more supply constrained, you should reward or increase the rewards for referring whichever side you're more constrained on, right? So right now we're talent constrained. So I know for a fact we need more machine learning engineers, right? Who doesn't? And so the rewards for referring machine learning engineers will be more valuable than, say, referring a small dentist office you're not going to do as much business. All right, what's next? Right now we play in tech, IT outsourcing. It's a giant category. I mean, it's 1.5 trillion global IT outsourcing market. But I think this Braintrust, this user-owned model will work for any knowledge worker category. We've looked at accounting, paralegal work, compliance work, really any sort of knowledge worker professional will fit into this model. So these are all things that the Braintrust community debates on, when and where should we expand. And that's all I got for my presentation.
Okay, well, terrific. Thanks a lot for that. So can you just, any quick comments about what it's like to finally be having the token trading?
Well, I'll tell you the most important reason, or the reason it's such an exciting milestone, it actually has nothing to do with price. Like our network is completely designed to, one token, one vote, bid staking, all the uses for our token actually don't presume any cash value. And thus the actual cash value of the token is not relevant. But I'll tell you, like having an exchange like Coinbase be our first kind of launch partner there, it was very validating, right? Coinbase is an investor in the project Coinbase Ventures a couple of years ago. And then, to have them sort of validate the project, be like, hey, you know what? Like we believe in user-owned marketplaces, and Coinbase to validate this new model. I think like DeFi is this incredible thing that's so innovative about blockchain technology, and I think user-owned marketplaces are the next thing after DeFi, right? Not that DeFi is going away, obviously, but it's to me the next meaningful category for this technology.
Makes a lot of sense. Well, terrific. So thanks a lot, Adam, and thanks for sticking around for the Q&A section. Again, if you've got a question, that you'd like to ask, put it in the chat. Put it in the Q&A section on Zoom. And if we pick your question, we'll let you know via chat, bring you up on stage as a panelist. And we're now bringing up on stage our first question is coming from Martina. Martina, do you want to open up your camera and your audio and your video?
Yes, hi. Thanks so much for taking my question. So I'm wondering to what extent decentralization is possible in a marketplace where some governance of workers is required. So let's say there's like a legal obligation of workers, and the company is ultimately held liable.
Yeah, great question, Martina. So, Braintrust, like a decentralized network, is just software that connects buyers and sellers, right? Like, so what that does is that makes that's an innovative new way of running a marketplace that is, positive sum instead of extractive. What it doesn't do, it doesn't absolve anyone of liability, right? It doesn't change the laws. Like, so for instance, there are thousands and thousands of either people or companies, like small agencies, doing work on Braintrust right now for, hundreds of companies like Goldman Sachs or Nike or Nestle or Porsche. So let's say, somebody contracts with Goldman Sachs and, they sign an NDA, which is very common. That NDA is between Goldman Sachs and the talent. And let's say the talent, steals a trade secret from Goldman Sachs, and they connected via Braintrust. Goldman Sachs is going to pursue that person to the fullest extent of the law. And the fact that they were connected on a Ethereum-based decentralized network does not absolve anyone of that liability.
Thank you.
Answer the question. Okay, terrific. Thanks a lot, Martina. We've got the next question is coming from Matt. All right, Matt, open up your camera and audio and video. All right.
Hey guys. I was actually asking, I think you answered mostly on the last slide. I was asking about the potential to expand outside of tech into other industries. And I guess since you mentioned it, but as a follow-up, if you think about the global workforce and people transitioning from like a full-time role into working like this in a user-owned network on a gig by gig basis, do you think that this just becomes a much more viable way for people to earn a living, particularly outside of maybe a place like the US, and ultimately more and more percentage of the workforce ends up in this type of gig by gig role?
So, I mean, I'm biased, but I think it's inevitable. And here's why. So there's a few problems that needed to be solved for what you just said to become true. and there's some that still are unsolved. So, first of all, like we needed companies to generally accept remote work. 3-4 years ago, that just wasn't the case, right? I mean, like especially US companies, it was like, we want butts and seats. We want to look over your shoulder. COVID changed that for the positive, right? The second thing was you need a good place to find good work. Like if you're gonna live in the US, you need to make a certain level of money just to live. And I don't care where you live. And that's usually why people want a salary job, right? It's reliable, dependable, stable income. So you needed a marketplace that would provide reliable and enough and stable income. You can't get that on Upwork, right? Like you can't get that on Fiverr. You can't do how many $5 jobs you have to do to make 80 grand a year, right? To live in St. Louis or Cincinnati or wherever you live. And so Braintrust, I think, fills that gap because we cut all the fees away. Now these big companies are placing these massive jobs that are often ongoing, right? 6, 12, 18 month plus jobs. So now you can make a living. The surprise here was you actually make more money on Braintrust than you do on average, as a salaried person. So those two things I think will make what you just said true. The third thing though, that like still tough is health insurance, right? Like, it's still like in some places can be prohibitively expensive to buy your own health insurance. And that is often a valuable perk of being, a salaried employee. Look, I think the markets will figure that out. They have to, right? Because this trend here is just, I think moving quickly.
Is there a way that Braintrust can implement that, group healthcare plans, for example, in certain countries where you have critical mass?
I think it's a great idea. It's actually something that's been kicked around in our governance channels. It's one of those bigger ones where like it would require some real coordination. Like someone in the community would really have to be like, you know what, it's almost like its own business, right, inside Braintrust. But yeah, I think it's an awesome idea. It's like if we don't do it, someone will do it.
Right. Thank you.
Hey, thanks, Matt.
Okay, thanks, Matt. Our next question is coming from Mark. Hey, Mark.
Yeah, hi. Thanks so much. This is really fascinating. I wonder whether you might talk a little bit about how you incubated the project. You mentioned that you sort of, worked off chain and maybe just kind of that process, because I think that's sort of fascinating. I mean, congratulations on the viral growth. I mean, 50 to 700,000 is just insanity. I mean, obviously you're really onto something. And were some of those people that you have as sort of referrers in that whole process, are they really the kind of linchpin to this whole thing? Are they the secret sauce, or how does that work? Can you just talk a little bit more about that? Thank you.
For sure, Mark. Yeah, thanks for the question. And one of the things you pointed out is actually kind of one of the weird things about our project. Like we've been off chain for 2.5 years, but we didn't get on chain until September 1st. It was 21 days ago. And a lot of people are like, really skeptical of that. Like, first of all, like, why would you do that? Second of all, if you could build something for 2.5 years off chain, why do you even need to be on chain? So valid questions. The first one, and then I'll get Mark to your third question. The first one is like, why do all this work off chain? Well, I've been an investor in the space for a long time and really passionate about these user-owned networks, whether they're in DeFi or wherever. But the one kind of fatal flaw I saw in a lot of the decision making with these projects is they come up with amazing smart contracts and probably good token economics, untested, but clever, and then they go right on chain right away, decentralize immediately, and kind of hope for the best. Well, it's really hard to build any kind of network effect business on chain, right, and from scratch, with no coordination. So we thought, well, look, we know a talent network is something that's it's like selling water in the desert, right? Like it's unlimited demand. And so let's start in a space that we know there's unlimited demand and start with a really disruptive fee schedule so it'll grow quickly, right? It grew quickly because of gravity, right? Not because we're so smart. Like, I think we have good teams that execute well, but like, this wasn't a genius thing, right? We just like dipped our cup in the water where we knew the stream was running, built a real network off chain, and then implemented on chain with the incentive mechanisms that we already knew worked. So that's why we backed in that way. And then why do you need a token? It's like,
that's
well, how else?
And then how far did you get before you could get some of those larger enterprises to bite? I mean, how much traction did you have to have, or did they get it sort of like early on?
Yeah, you know what's funny, when we got this from, so Nestle was our first big client, didn't want to hear a thing about the token. Now they're super forward-leaning people, and actually their CIO Gordon is like been a huge proponent of the project, but that wasn't their initial thing, right? Like people don't care about blockchain for the sake of blockchain, right? You care about the applications the technology enables, and blockchain technology enables user-owned networks, which are no fee, right? They're no middleman networks. Like, why does everyone love DeFi, right? Because you don't have to like call Wells Fargo and waste 45 minutes trying to get a wire transfer going, right? Like DeFi is rebuilding the global financial system in a permissionless way and fixing all the things that suck about banks. That's what Web3 is doing for marketplaces. So it wasn't like it's never been about the tech for our clients, right? They just don't give a shit. They're like, oh, you got these amazing talent on here and you're not charging us a massive markup. Why? Because our talent owned the network. How? Token. Cool. End of discussion.
Very cool. Thank you.
Yeah. Thanks, Mark. Our next question will come from Arvi.
Yeah, hi. So my question would be about the fact that, Braintrust is decentralized and global network, but a lot of companies, especially the US companies, do restrict their job postings to US specifically a lot of the time. Sometimes they would consider same time zones, but it's been my experience that, so the question would be, is there an idea how to disincentivize that type of behavior and actually do open up the job postings to a more global audience?
Yeah, Arvi, it's good to see you, sir. Thank you for the question. This is a topic I'm actually really passionate about personally. So to summarize, it's like, hey, you've got mostly U.S. clients, right? That's where most of the IT demand comes from, is U.S. companies, some Europe. And what the problem with these U.S. companies is they have this anachronistic thinking around, okay, fine, if we're not going to make people come into our office, well, we're going to make them be in our time zone, right? Or +3 from Pacific or whatever, right? Stupid. It's absolutely ignorant thinking. Now, to be fair to enterprises, right? They're a little slower moving. They need to adjust to change. They don't adjust to change as quickly as startups do. But here's my thinking around this. So in the last 2 to 3 years, we've got them to stop making people come into the office, right? Big win. Next stop, open up to global time zones. And so the way we're actually implementing this now at Braintrust, one of the core engineering teams is implementing this, where we thought, well, so we used to ask question on the onboarding, what time zone do you live in? Then we realized, what a stupid question, right? Like, it's irrelevant what time zone you live in, one. Two, a lot of people live in lots of time zones, right? Because they're nomadic. I mean, that is shockingly common now. And so we changed the question to, which time zones are you willing to service, right? And so that you can answer, and by the way, I don't, to be totally transparent, I'm not totally sure if this is live yet or not. I know it's been spec'd. I'm not sure it's been implemented, but the new question will be, you as a talent, which time zones are you willing to service? Okay, PST, the 4 US time zones plus 5 more bridging into Central Europe, maybe, or going the other way toward the Pacific. And then when clients post jobs, the UI will direct them toward not what time zone does the person need to live in, but how much overlap are you willing to do, to contract with your talent. And if you say, look, I live in, the clients in Central Time, St. Louis, hey, we just want like 3-4 hours overlap. I guarantee you almost everyone in Central European time zone will be happy to do that. So that's sort of how we think about it. And I'll tell you, like, the other kind of putting our money where our mouth is on this. Like, we have no American engineers. I mean, just me. I'm kind of a shitty engineer, so I don't count. All of the core devs stretch across many different teams. We're a freelancer built marketplace, all in South America, Europe, or Africa. So we eat our dog food on that point.
Yeah. Oh, yeah. Thank you.
Hey, thanks for the question. Good to see you.
Okay, terrific. Our next question is going to come from Brian.
Hey, Adam, how you doing?
Hey, Brian.
Love Braintrust. I find it fascinating. I had listened to, I think, a talk that you gave and found it somewhere on YouTube about how you came up with the idea for Braintrust in the first place and how you were effectively an economic model looking for a category. Curious how you thought about talent being the ideal first category and how you think about what might be the likely next categories to pursue after talent. That's part one. I actually have a part two after you answer that.
Yeah, sure. So we started with tech talent because it's like, look, and we started this in 2018. So if you're going to use a blockchain token to, draw people into your network and use it as an incentive mechanism and a governance mechanism, you got to be able to explain what the heck a token is and, why it might be useful. And so we thought, look, it's probably easiest to tell this story to product managers, designers, UX people, engineers, project managers, rather than if we started in ride sharing or food delivery. Frankly, more interesting categories as far as I'm concerned for this type of model. But we had to start somewhere and prove it. So that's why we started where we did.
Awesome. And then part two would be, I'm actually working with some partners and looking at interesting things to do in Web3 and real estate. If you were to pick something to do in real estate, what do you think would be the most interesting thing to do?
I invested in this project a while ago that was created the infrastructure for on-chain REITs, right? So you can tokenize a property. I love that idea. I still do. I have some ideas why it's not mainstream yet. I think the buy side's just not there yet on it. But imagine being able to tokenize literally any property and have global liquidity opened up for it overnight, permissionlessly. I think is insanely interesting. The other idea, I think I can't remember where I've seen this, but the idea of building a crypto community around a property and having almost like tokenizing an HOA. Right? Think about, in every HOA, just say you live in a 400 unit building, like in New York or something, there's good citizens and bad citizens, right? And neutral citizens. And, I think a tokenized HOA economy that rewards good behavior and maybe, disincentivizes bad behavior. Yeah, that could be interesting too, but I don't know.
Super cool. Thanks.
Yeah. Thanks, Brian.
Okay. Thanks, Brian. Our next question comes from Mitch.
Hey, Mitch.
Hey, Adam. Hey, thanks for the time. So I'm actually really interested in the move to the decentralized model. And so you touched on it briefly at the end, but I'm just curious how the process will look like for expanding into new industries and geographies, just kind of what the actual steps will look like. And then kind of as a second part question, as I'm guessing the referral engine might be involved, how that program has since changed since you've moved on chain as well, and what the metrics look like.
Yeah, Mitch, great question. It's hard to predict exactly how things will work in a decentralized network because people are going to do whatever they're going to do. So I think, I think with category expansion, I think we'll get a critical mass of folks in the community that be like, hey, we should move over to X, right? Maybe it's a different suite of knowledge work, transcription and video editing and whatever, right? Maybe something like that that's adjacent. And then the community will decide hey, who's going to run this, right? These are still businesses at the end of the day, and they need CEOs, right? So you have to have a CEO of that business, and then that, the community will have to, it's almost like a venture pitch, right? It's that person will have to, come together with a plan and say, look, we think we can do this. We're going to ask for a grant of X number of Braintrust tokens to execute it, and it'll be dispersed on these milestones. Looks a lot like venture capital, doesn't it? But except, instead of, two assholes on Sand Hill Road deciding who gets the money, it's our token holders, right? The Braintrust community gets to decide.
They're not all assholes.
Oh no, I didn't say all of them. I'm just picking any two assholes on Sand Hill Road. Lou, we all know there's at least two there, right? None of our investors. But the whole point is I love to be derisive about Silicon Valley because I've been here for 20 years. The whole point is why should gatekeepers on Sand Hill decide how a network grows, right? The people who own and control the network should decide.
Okay, thank you.
Terrific. Thanks for the questions, Mitch. So we'll wrap it up now, and I'll take the last question, and that's if we have you if you come back in a year to do another webinar and talk about decentralization and Braintrust and what's going on, what do you think you'll be talking about in a year that you're not talking about today?
Yeah, if I can, I'd rather answer this question in a broader context than Braintrust.
Sure, that'd be great.
Yeah, because it's like, look, I mean, Braintrust probably looks the same a year from now as it does now, but like, I don't know, probably 100 times bigger, but like, probably not that different, right? We found product market fit. Maybe we're in some different categories, but like, I don't think it's probably not meaningfully different. I think it's way, way, way bigger. I think a year from now, though, Lou, if you'll have me back on, I think we will start really marveling at the disassembly and the unwinding of corporate America, right? This kind of like bullshit model where these big companies just warehouse talent and like no one really likes their job, and people are just kind of in it for the paycheck. Like, we're going to see that meaningfully unwind thanks to networks, hopefully like Braintrust. And on the other side of the labor spectrum, we're going to see these insane extractionary gig economy companies like DoorDash, who, their stock price is insane. Their CEO makes $500 million a year. And look, I'm not a socialist. I have nothing against people making hundreds of millions or billions of dollars a year. I think that's amazing. I'm a red-blooded capitalist. But at the same time, they're pushing their customers, their restaurants, into negative gross margins. Their Dashers, many of them are not living, near the poverty, or they're living near or below the poverty line. And like, same for Uber and Lyft. And like, look, these are bad business models, right? And they're open for disruption. And what's the disruption that's going to fix these things? User-owned networks. DoorDash needs to be owned by the restaurants and the Dashers, not investors, not VCs. Uber needs to be owned by the drivers and the riders, not Uber Inc. calling the shots from San Francisco while they, have tens of thousands of employees making hundreds of thousands of dollars a year doing basically nothing. Replace those middlemen with software, right? And that's my path. That's what I think blockchain is all about. Right? So I hope we come back here in a year and like there's some progress on that.
Yeah, well, from your mouth to God's ear, right? That would be, I think, a better future for most of the people on the planet. So thanks a lot, Adam, for coming on today, and thanks everybody who joined. See you later.
Thanks, Lou. Take care.